There are many different ways to invest big in real estate. You can invest in an apartment complex or get into wholesale real estate investing. When you invest in an apartment complex, you buy all the units within it and then manage them. This is a more expensive option, but it's also the most stable way to invest because you don't have to worry about tenants moving out or the property changing hands. On the other hand, when investing in wholesale real estate, there is more liquidity because each property is sold individually and not as part of a larger package with different properties. You could make a good profit by buying low and selling at the right time, but you could also lose everything if your timing is off and you sell at a low point in the market cycle. Apartment complex investing, also called multifamily real estate investing, is the acquiring and managing of property that consists of more than one apartment unit or an entire complex. It typically includes a mix of residential and commercial properties, such as condominiums, townhouses, lofts, and mixed-use buildings. This real estate investment strategy focuses on the long term and is a good option for investors not interested in flipping properties. Two main strategies are used when investing in apartment complexes. 1. Buying a complex at an affordable price, renovating it, and then selling it at a higher price. 2. Buying a complex, renovating it, and leasing some of the units out while keeping others vacant until they can be sold at a higher price. Wholesale real estate investing is a method of acquiring properties in bulk at a bargain without the need to manage them. The investor buys properties in bulk and then sells them off in pieces to other investors or buyers. Depending on the investor's goals, this method can be used for residential or commercial real estate. Investors use a couple of strategies to acquire whole real estate. One of the most common strategies for wholesale real estate investing is buying properties from a bank. Banks are often sellers of properties that they have repossessed. They are usually willing to sell these properties at a discounted price, which can be an excellent investment. 2. Another strategy is finding undervalued or distressed properties and renovating them to sell at a higher price. This strategy requires more upfront capital, but the payoff can be significant if you do it correctly. There are also risks associated with this investment. Here are 10 points to consider before making a real estate investment. 1. The purpose of your investment. 2. What type of property do you want to invest in? 3. The money are you willing to spend? 4. Rent-to-value ratio. 5. Rental income and expenses. 6. Property tax. 7. Occupancy rate for the area. 8. Future development plans for the area. 9. Experience with real estate investments. 10. The time you want to spend on this project. The key to real estate success is buying the right property and managing it well. Apartment investing is a good idea. It's an excellent way to make money. You need to find affordable properties in a good location with a lot of potential for appreciation. There are risks involved with any kind of investment, so it's essential to be aware of them and take the necessary steps to mitigate them.